Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hidden within corporate filings. Today we are diving into Worthington Steel, S latest report. Get ready because things are heating up, and we are about to see if this steel giant is truly forging ahead or starting to lose its temper. Before we dive in, if you love getting straight to the point insights from these filings, hit that subscribe button. We also have a fantastic Discord community linked in the description below where we break down these reports even further. Scroll form 8K scroll. Alright, let's get straight to it. Worthington Steel Incorporated has just released its current report, and there are a few key things we need to talk about. Think of this as a snapshot of what has been happening behind the scenes. First up, we've got to look at their recent financial performance. They released their results for the first quarter of their fiscal year 2026, which wrapped up on the 31st of August 2025. Now, they are providing both the standard accounting measures, what they call GAAP, and some other measures they are calling non-GAAP. They say this helps investors compare their performance better. Basically, they are highlighting numbers they think tell a clearer story of their ongoing business operations. If you want the nitty-gritty, all the details and how they connect the two types of numbers are in that financial news release and their investor presentation. Scroll, this is Worthington Steel. Incorporated, they are a big name in the steel industry. You know, the kind of company that makes the metal that builds our world. Now, let us move on to something that affects who is actually steering the ship. They held their annual meeting of shareholders on the 24th of September 2025. And just like any big company, they had to elect some directors. We see a few names here. John J. Bauscher, Charles M. Chiappone, and Mary Schiavo were up for election. Looking at the votes for Mr. Bauscher, he got a significant number of votes for, at over 35 million. Mr. Chiappone also had a strong showing with almost 39.3 million votes for. Ms. Schiavo garnered close to 32.7 million votes for. All three were elected to serve for a 3-year term, so the leadership team that is guiding Worthington Steel remains in place. Next up, a vote that many shareholders care about the compensation of their top executives, often called NEOs, which stands for Named Executive Officers. The shareholders voted on this, and it looks like they gave a thumbs up. We are seeing over 40 million votes for this proposal. This indicates that, in general, shareholders are content with how the top brass are being compensated. Remember, this is an advisory vote, meaning it is more of a strong suggestion to the board. And finally, a crucial part of good governance is having an independent check on their finances. This proposal is about ratifying the selection of their independent public accounting firm. The shareholders overwhelmingly approved this with almost 45 million votes for. This means they are sticking with KPMG LLP to audit their books for the fiscal year ending May 2026. It's good to see such strong agreement on this front. Now, for something that likely caught the eye of many investors, they've announced a dividend. The board of directors has declared a quarterly cash dividend of $0.16 per common share. This dividend is set to be paid on the 26th of December of 2025 to shareholders who are on record as of the 12th of December 2025. For those who just want the simple picture, this means the company is sharing a small piece of its profits with its shareholders. It is a sign of confidence from the company that they are generating enough cash to return some to their investors. You can find a lot of these details attached as exhibits. Think of these as the supporting documents. We got the financial news release, the transcript of their conference call, where they discuss these numbers, an investor presentation, and the dividend release. These are all filed for transparency. Now for my take. Worthington Steel seems to be navigating the current economic landscape with some steady decisions. The re-election of directors and the strong ratification of their accounting firm suggest stability and continued trust in their current leadership and governance. The dividend announcement of $0.16 per S-share is a decent signal of ongoing profitability, though the amount itself is huge. It is more about the consistency. However, the real story is always in the financial results themselves, which we've only gotten a high-level overview of here due to the nature of this filing. If those non-GAAP measures they are using paint a significantly rosier picture than the standard GAAP numbers, that is something to watch. It could mean they are managing their reported earnings carefully, and investors need to dig deep to see the true underlying health of the business. The main takeaway is that Worthington Steel is operating on a steady keel. They holding onto their leadership, maintaining their financial oversight, and returning value to shareholders through dividends. The key risk, as always with commodity-based companies like steel producers, is market volatility. Prices can swing and demand can fluctuate based on global economic health. For Worthington Steel, staying competitive and managing costs in their production will be paramount to continuing this steady performance. Alright, that is our breakdown of Worthington Steel. S-latest filing, what is your take on these numbers and what they signal for the company? S-Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.